Nebraska cropland cash rents eased slightly in 2017, according to recently released USDA data. The average cost of $194 per acre was down $2 from last year. But the state continues to feature some of the priciest land in the country. The top dryland cash rent of $266 an acre in Dakota County was the 10th highest in the U.S. The most expensive statewide irrigated cash rent was in Dixon County at $312. Ag land values have seen an incredible rise. In this state, they're 2.5 times more costly per acre than only 10 years ago before adjusting for inflation. Purdue University economist Brent Gloy, who farms in southwest Nebraska, recently wrote on ageconomist.com about the farm real estate run-up and whether current levels are alarming. We talked with Brent this week in Omaha about cash rents, interest rates, and how farmland values across the nation have increased.
Farmland has been on a tremendous run. You look since like 1992, it's really increased a lot over time, and just recently it's finally started to maybe plateau a little bit, which I think was about time because it's just gone up so much in the last 10, 15 years.
You compared that value to the value of farm production. First, tell me why you're using that measurement and what you see when you compare it.
Right. I once remember a stock analyst was telling me how he valued stocks, and he said, you know, the top line number, the revenue, is really the best number because it's the hardest to kind of manipulate. And so we wanted to use just gross receipts and say, okay, how does farmland pricing compare relative to the gross income that the farm sector generates? And so that's why we use value of farm production. And what we found is that today farm real estate relative to its value of production is quite high. It's continued to become more expensive relative to the income that we're generating in the sector.
So you think this is a possible warning sign?
Yeah, I think it's one thing to look at it and say, well, look, you know, how much income does that asset base generate? And right now, that income that's generating is relatively low relative to how much you have to spend for that farmland you purchase. So we look at that as kind of saying, well, you know, it's a flag, and it's not a green flag. It's maybe a caution flag to say, hey, let's pay attention to this because we're not getting as much income for our dollar of investment in farmland.
Are those values alarming when you look at net income as well?
Yeah, so we also looked at net income, which is probably a better measure or another measure that you can look at. And when you look at that, that ratio is as low as it's been since 1983, I think. So in other words, the net income we get out of that real estate, we're just not getting that much net income out of the real estate. So it seems pricey relative to the net income it's generating.
The current economic environment that Nebraska's in and a lot of the Midwest is in, would you expect that would push land values down?
Yeah, and I think you're seeing that. Most of the statistics we see out of Iowa, Nebraska land value reports suggest that land values have come off of their highs. And in some ways, as an economist, I think, well, that's good because it shows the market's actually working. It means that, you know, I'd be concerned if it were still shooting higher and income is falling. So I think that's good. On the other hand, as a farmer and as someone who owns farmland, I don't want to see it going down because strong farmland values mean the farm sector is really healthy. And so I think we're seeing, you know, the health of the farm sector reflected in lower farmland values, which is rational.
What role would interest rates play?
Interest rates are one of the biggest drivers right now, or supporters of farmland values. They're very low on the long-term side. So I said before, if you take the cash rent and divide it by the farmland value, you're going to get something we call a capitalization rate, which is kind of a rate of return on farmland. In Nebraska, it's probably around 3% in most places before property taxes. So if you take out another, some places $50 an acre in property taxes, maybe more in some counties, you're cutting that rate of return even lower. The reason people want to accept such a low rate of return is because interest rates are really, really low. And so I think our 10-year Treasury bond is somewhere around 2.5% today. That's low. And as long as it stays low, I think people will be willing to accept returns like that. If it starts working higher, then I think people start to say, well, I'm not going to take a 2.5% return on my farmland. I want a little bit more. How do you get it? You either have to have higher rent or lower farmland values. Higher rents in this environment is a tough sell, I think.
Well, I do want to ask you about cash rents. The numbers in Nebraska, I just want to get your overall emotions on this. Irrigated land, the highest on average, is over $300. Dry land is over $250. Give me your thoughts.
Yeah, that's quite high. In fact, I was in one of those counties last year. I was giving them a little grief about being at the highest cash rental rate in the state of Nebraska. You know, it's high. And I know as a farmer, it's, you know, the rental markets are very competitive, and it's a tough decision. But at this point in time, those numbers are quite high. It's hard to make a very good return when we're paying those kind of cash rents. So I still look for cash rents to be a little bit soft, but I've got to admit that I've been saying that for a while, and the cash rental market has been fairly strong, not as soft as I would expect, let me put it that way.
Yeah, I think that's the final question. How would you advise farmers during this off-season if land comes up or if they need to renegotiate rents and things like that?
Right. I think, you know, it's important to have open and honest dialogue with landowners about where the economics are, and work to explain the situation to them, as well as you know, evaluate your opportunities carefully. I don't think it's right to say you shouldn't rent the farm. I mean, there are reasons you should do it, but I think it's important to really understand what the economics of renting that property are at various rental rates. You know, just do some analysis and see what kind of return you're likely to get. Another thing to watch for is, you know, budgeting government program payments. So in 2017, in maybe about a month, I think, you're going to start to see some pretty big government program payments received by farmers in a lot of counties. Not every county, but in a lot of counties. But I would say that we need to be careful to realize that, one, there's a 1-year lag on that. So you're going to get the government payment next year for the land you farm this year, not, you know, it's a year behind, which is kind of confusing, I think, to people. And two, the payments under the ARC program, ARC County program, are going to start going down really rapidly. And so if you're budgeting large ARC County payments in your budgets next year, I think you want to look carefully to see whether that's a good assumption or not. Look at some of the university resources that are out there on that issue, and I think you'll see that most people are expecting them to decline.